Hey everyone, welcome back to another video. In fact, this is the first video for this year from my side. So before we start, I'd like to wish all of you a very happy new year. And also in this new year, what I want most of us to do is to have a very disciplined way of investing. So if you've landed in my channel and if you're the first time, if you're looking at my channel, then definitely I'm going to look for some, disciplined way of investing and a very proper way of identifying stocks which are good and which are entering into long-term uptrends and which are just finishing long-term downtrends. So today in this video, we're going to discuss about a stock which has grown its profits massively, grown its sales massively, and has not done well in terms of stock price performance in the last few years. In fact, the stock, since it was listed, is still available at the same price, whereas the sales and profits have gone up, almost 2x, 3x. In terms of sales, it has gone up 3x. In terms of profits, it has gone up 2x in the since last 5-6 years. So it's a very interesting stock from the agrochemical space. And today, let's look at this stock and see why it makes a very good candidate to be a part of your investment portfolio and why it can give very good returns and what is the target for this stock. I'll also be discussing that. So stay with me till the end of this video. So let's look into this stock, which is Sharda Cropchem. Now, the stock has given its results today. In fact, it gave its results yesterday, Saturday, on the 22nd of Jan, and it has posted really excellent results, and it's been all over social media. So it also has come in my scanner. So I'm going to teach you also how to scan for such stocks and how to make it part of your portfolio and how to get some good returns. So let's not waste more time on this and on introduction, and let's jump directly into the stock. So I'm using screener.in, as most of you know. So screener.in is actually a very good application in order to understand the fundamentals of a company. So in case you have not taken a look at screener.in, you might want to look at it. And also in my blog, I've written how to use and how you can understand the company using screener.in. So you might want to check these if you're a beginner, especially if you have some goals this year to make some money in the markets, then definitely you have to go through this and look at them. So looking at this company's fundamentals, which is the first thing that you should be doing before you jump into the stock, you need to first look at, in terms of the company performance, how is it doing financially, and then take a decision whether you want to invest in the stock. Even though the technicals are good, sometimes it's just prudent or wise to not invest in a company which is not doing pretty well. Okay, so this company has been doing pretty well in terms of ROC. They've been able to generate 23% returns on 100 rupees that they invest. So that's a pretty good return on capital employed, and also return on equity for shareholders like us has been decent. And this company is around 3,000 crore mark, which is not a very big company. It's a pretty small sized company, and it has a lot of potential to do well going forward. And the stock is trading at a PE of 11, which is quite undervalued in my opinion. For a company which is trading at least a 23 ROCE, I usually tend to expect that the company also trades at 23 PE as well, at least, right? So sometimes companies do tend to be valued at 40, 50, 60 PE depending on the growth potential, like FMCG stocks. But in this case, this company also has no debt, so you don't have to worry about debt overburdening this company. It is a pretty decent company, and it has grown its sales by 48% recently, and it has a lot of money. It has no debt, so obviously interest coverage ratio is going to be pretty high. And if you want to understand more details about this company, then you might want to check out these details which are listed here in screener.in. So if you just click on read more, you'll find a lot of details on this company, and you might want to see what is the revenue breakup, where is it selling its products and all that. So that's a quick overview on the company itself. And just looking at the PE ratio, right? So I spoke about PE ratio, and it's at 11 right now. But when this company was listed back in 2014, when it was listed, it was trading at a very high PE, and 2017 onwards, we have the data. So it was trading at a 30, almost at a 25 PE, right? Which is double as of it is today. And since 2017, or since the company was listed, the company has almost tripled its sales and has almost doubled its profits, whereas the PE ratio has not been doing much, right? So which means that the stock has not moved in terms of price, and the stock has been stagnating for some time, while the company's business has improved significantly in terms of sales and in terms of profits. We'll look at those details shortly, but what I want you to notice here is this EPS column that you look here is actually has been falling, and it had kind of bottomed out in Jan 2020, and again the earnings per share has kind of climbed and is right now pretty high, and earnings per share today is at 28 rupees per share. Now that's a pretty significant growth in just a couple of years, and that's probably why the stock is completing its downturn and it's moving into a newer journey and a new long upward journey. right? So a few more details in terms of the peers. You can look at the peers, you can go through them. You might say that some of the peers are doing extremely well, but it doesn't mean that you have to ignore companies which are not as good as the peers. So you might want to find undervalued companies and buy them for quick gains and probably book some profits and enjoy that money for what do you need. So in terms of quarterly results, as I said, the results came just this week. And here, if you see, the sales have been pretty phenomenal, right? From 640, they've gone to 880. And if you compare year on year, which is what you should do instead of comparing quarter on quarter, if you compare year on year, it has gone from 500 crores to 880 crores. And that's a pretty significant jump in terms of the growth itself, right? And the margins have again come back to 21%. It's around the 20% also last December. So the margins are pretty good. And the profits have gone up from 78 crores to 136 crores, right? Now obviously that there is some additional differential is coming from here, but majority of the profits are coming from operating profits, which shows that the company is also making money operationally as well. There are no some extra gains or one-time gains, nothing of that sort. So it's coming purely from operational performance, and yeah, it's pretty good. And yeah, so that's from the fundamental perspective. Now looking at the yearly trend, right? So yearly trend, the company has grown every year on year. The company has been able to grow significantly. And today it's last financial year, the sales was around 2,400 crores, and also it made a profit of 300 crores, right? Also all-time high profits, all-time high sales. So everything looks excellent. And the sales has been compounding at a 12% CAGR, profit has been compounding at a 9% CAGR, and yeah, the balance sheet looks excellent again. In terms of reserves, the reserves have gone up significantly since 2010. Even the last few years, the reserves have gone up 50%. So they have a lot of money to deploy to create new capacity, to expand their business and all sorts of things, right? So just looking at the shareholding pattern, the promoters have been holding majority of the company. 75% has been held by promoters, and DIs have been holding the remaining majority of the significant amount that they have. So 9% by HDFC is held, and DSP holds around 3.5%. Right. So from a shareholding perspective, I think the promoters have significant confidence in their business. That's why they're holding such good amounts of shares. And in case you want to look at the recent results which came yesterday, right? So you can just click on this. You can find the results of the company. You want to go through in detail, you can do that as well. So that's from a fundamental perspective. So I know you would be having your own thoughts about the fundamentals. You might also have analyzed the company from a fundamental perspective. So in case you have any thoughts on the fundamentals of this company, and if you've done some research, then do let me know in the comment section. We can have a healthy discussion in the comments, or even on Twitter, just tag me and write me there. We can look at that as well. But the second important factor that I always look at, right now, fundamental is a very important thing to look at, especially if a company is doing phenomenally well, then it's excellent. But the need to look at technical analysis is very important, right? So if you have been with my channel, you know that technical is something that that's my kind of skill that I've developed over the years, and I look at technicals to catch or invest in a stock at the right price. Right now, let's markets have gone up a lot in the last 2 years, and you can't just invest in any company at any price. You need to know what is that point that you want to invest where the risk is really less, but whereas your rewards are much higher or multifold. Now that's what we're going to look at now, and let's look at the technical analysis of this stock. So now most of you might be using TradingView already. If you haven't, or if you don't know TradingView, it's a free tool and it's pretty good. So you can go to this trading software and look at the details. It's very helpful in terms of looking at the stock price and all that. Okay, so I'm looking at the monthly charts now here. Sorry, I'm just going to quickly switch to red, and so that most of you I might understand, most of you might be using green for looking at charts. You might be using your own colors in terms of ups and downs. I'm going to quickly change that so that you also know what I'm looking at, right? So yeah, so this stock has been listed in 2014, and since then the stock has been trading in a kind of the same, I won't say in the same range, but since 2014, that it's at the same level it was trading in 2015. The stock obviously had a massive correction after the 2017 mid cap small cap crash. The stock also corrected. It went all the way down towards levels of 100 just before the COVID crash, and since then the stock is up almost 4x, and I still feel the stock has a lot of potential in terms of giving returns, at least a minimum 50% returns or 100% returns going forward. And I think it's the right price where you can invest with a minimum risk in the stock. So I'm going to look into the weekly charts, and I'm going to tell you how I found the stock. Right now there are a lot of ways to scan for stocks. But the stock, how I scan for stocks is using CCI indicator. Now this is a CCI indicator that I've plotted. You can go to indicators and search for CCI and you will get this indicator. I'm using a 34 period length, and I use this indicator. And if you see this indicator, whenever the stock, whenever this indicator moves over 100, I have a scanner on charting where it shows me the stock, and this stock came in my radar last week. So since last week, I've been tracking the stock because it's fundamentally very good. And I know the stock has not done much in the last many years, and that's why the stock is very interesting for me, right? So once you find the stock coming, and then you want to know what has it been doing in terms of price performance in the last many years. Okay, so now if you look at the stock has been in a strong downtrend since 2017. So if you take this tool and if you plot this, you would see that this stock has been in a continuous downtrend since 2017, and finally it had a breakout in the month of Feb, right? And since that month of Feb, this stock has been going completely sideways. But another interesting thing to note here is the volumes that have been coming along with this breakout since Feb 2021. Right, the volumes have been excellent. In fact, it has been having one of the highest volumes ever in the last many years, which means a lot of people are buying this stock, right? Probably HNI is accumulating, probably FI is accumulating, or DI is accumulating. You never know who's buying the stock. But what you need to make yourself aware about is that someone is buying the stock, and the stock is now coming out of a long-term downtrend. This was a long-term downtrend, almost a 4.5 year downtrend. And if you include this year as well, then it's almost a 5 year downtrend and consolidation. And now the stock is looking really good because it's attempting to head higher after a strong rectangle consolidation of 1 year, right? So since this breakout in Feb, or Jan, you can also call it Jan, this stock has been going sideways, and now this stock is looking to head higher. Right now, always remember that a stock which is breaking out of a consolidation, especially rectangle consolidation, there's a very high probability that this stock is not going to come down, but rather the probability is on our side, and the stock is probably going to give you much higher returns going forward. Okay, so that's how I scanned it. So scanning, I use CCI. If the weekly CCI is going above 100, that's when it comes in your scanner, and then you want to find a proper point when you want to buy that stock so that you're immediately sitting in profits. Okay. Second point is what price do I buy? Do I buy it at the current price, or do I buy it later? Should I wait for some more time? Now, for that, you need to go into the daily chart and you need to look at the stock and see what is happening, right? So in daily chart, if you see the stock, was also again consolidating here pretty strong. If you see here also, we've had a strong consolidation and then a breakout. And since the breakout, the stock has been heading higher, right? So for me, overall, the stock is also in a very strong uptrend in the daily time frame. And here, if you see, we've had a consolidation breakout, again a strong consolidation. A consolidation means the stock is not going anywhere, so which means some people are still selling, and the selling is being absorbed, and now the stock has given a breakout. A lot of people have brought this or traded the stock on Friday. Almost 35 lakh shares were traded, and I feel that this is the best time to enter the stock. So buy the stock at current market price, which is 379.3 or 380. Buy the stock with a stop loss at 340 or 345. Right, unless the stock doesn't close below 340, 345 on a daily basis. So which means at the end of the day, the stock should close below 340. Unless it doesn't close below 340, 345, you should be totally invested in the stock and you should buy the stock. Okay, so that's the second point. I analyzed how I entered the stock and how I found the stock entering the stock. I also given the stop loss as a 345. Now the next point is the most important question of what is the target that I can expect in the stock. Now first, always look at the stock in terms of risk. So risk perspective, a 345 to 380 is 35 points. So that's 10% stop loss in this stock. So how much can you invest in this stock, right? So that should be the next question. So if you have, let's say, 10 lakhs of capital is the overall money that you want to invest in markets. Out of this 10 lakh, you can put at least 5% of your money in this stock. So which means you can at least allocate 50,000 of the 10 lakhs that you have, and you can expect if the stop loss hits, you're probably going to lose 5,000, which is 0.5% of your overall money that you will lose, which is totally fine in terms of losing. Obviously, risk without risk, there's no return in market, so you need to risk your money. So 0.5% of your capital is what you're going to risk. Allocate 5%. But if you think that you can invest much more, then you can go ahead and invest even 10% of your overall capital. In that case, it would be 1 lakh. So you can invest 1 lakh in this stock, and you can risk 10%, which means you will lose 1% or 10,000 on your overall money. Okay, so that's the next point I wanted to highlight in terms of allocating the money to this stock. Now, obviously, last question is the target. So I'm going to talk about targets right now. So I'm sure you're pretty much interested to look at the targets. Now, In terms of target, I'm looking at previous all-time high, which is around 570 or 600, right? So 600 is a round number, so you can pretty much say, the next target would be 600, which is a minimum of 50 plus returns from the current market price. So which means you're taking a risk of, let's say 50,000, and you're probably looking for, taking a risk of, 5,000 or 10,000 rupees and looking for much, much higher returns. So if the stock goes up 50, let's say you invested 1 lakh, and if the stock goes 50%, you're making a return of 50,000, and your portfolio would be overall up by 5%, right? So that's the kind of return that we're looking at in this stock. Now, obviously, once it comes to 600, don't just sell it off. Rather, use a trailing stop loss indicator, something like a moving average. Now, I have it as a template here. So here, if you see, I'm putting up the 20, 10, 20, and 50-day moving average and the 200 moving index. So this is a 10-day moving average, 20-day moving average, 50-day moving average, and the 200-day. Now, in case you're sitting in decent profits, then use the 50-day moving average and do not sell the stock unless it closes below 50-day moving average, and only sell unless it closes below 50-day moving average. So you can catch some really big returns. Now, this stock can go up 2x, 3x. You never know how much it can head higher to. But if it does head higher, you don't want to miss this wonderful opportunity, because the stock is fundamentally very good and doing pretty well in terms of financially, and the stock has not done much in the last 5-6 years. So keep that in mind and don't miss investing in the stock right tomorrow. So tomorrow there can be a gap up, there can be a gap down, depending on the stock results and how the market sees. So what you want to do is, just wait probably for the first 5-10 minutes and then see what is the gap up. Let's say tomorrow it opens at 400, then you want to look at how much you want to invest and then invest accordingly based on that. Whatever price it opens tomorrow, you probably want to take your first position and buy at least a small quantity, at least 2.5% of your overall capital, so that you don't miss out in case the stock starts heading higher directly from tomorrow. Okay, so that's it. I hope you enjoyed this video, first video of this year, and I hope this stock is going to make us money in the coming months and coming years. And if you did enjoy my analysis, don't forget to share this video with your friends. Don't forget to like, comment, and especially with your colleagues as well, because a lot of people have been troubled in the last 1 year financially. So let's help people make money. And in this year, don't forget to join me in this investing journey, and don't forget to learn along with me. Okay, so that's it for today. I'll leave you here. Take care, stay safe, and stay healthy. Thank you, and I hope to see you in another video soon.